India's top IT companies will be in focus this week as TCS, Infosys, HCL Technologies and Wipro and also others will start reporting their September quarterly earnings starting October 11. So what are the big expectations? Will IT companies report strong results in a seasonally strong quarter or will slow down, demand downturn, client spending crunch, attrition, all of these issues will continue to persist? Let's find out. First up, let's see the stock market performance of most of these IT companies. When you compare the Nifty IT index, that has risen 7.5% in the July to September quarter, and this has comfortably outperformed the Nifty as well, which has risen only 1.6%. Now, this outperformance has largely been driven by the strong deal wins and also expectations of the demand revival in the fiscal year of 2025, as most of the analysts on the street have already been projecting. Now, what should you be watching out for from the IT sector earnings? This time around, the focus will largely be on the signs rather than the actual numbers, as Q2 appears to be a continuation of the weakness that was seen in the previous quarter. So, commentary will be important on whether the worst of the demand deterioration is over. What will also be important to watch, whether there are signs that there are green shoots on demand really emerging. Also, will growth recover in the second half of the fiscal year 2024, and what will financial year 2025 also look like going forward for the entire sector? Now, while there have been strong deal wins over the last 2 months that we have seen them announcing, there has been no deterioration in demand but no improvement either. So, it's been largely a sideways kind of momentum. But will things start to improve is the big question and something that we will all be watching out for. Now, Infosys is likely to see another quarter of just about 1% growth, while Wipro's revenue may actually decline for the third straight quarter, and this number is likely to be within the range as well, which was guided by the company earlier. Now, when we talk about Tech Mahindra, that is also likely to report a decline in its overall top line. However, the highlight for the quarter will actually be the deal wins. Like I pointed out, large deals have already been reported and they have been robust during the quarter. Infosys, for example, already signed a large deal with Liberty Global. TCS got a large deal win from Jaguar Land Rover. HCL Technologies' big deal win was with Verizon as well. Now, as far as the expectations go, Kotak Institutional Equities has estimated Infosys to report a total contract value of anywhere between $5.5 billion to $6 billion. This is well above the previous quarters of average of $2.4 billion as well. So, this is going to be a big positive that could turn out for Infosys. Nuvama Brokerage House has said that both TCS, Infosys and even HCL Technologies and even LTI Mindtree, they're likely to report a growth rate of 0.5 to 1% growth in terms of constant currency. Also, TCS may report deal value of worth $12 billion. That is up 48% from last year. Another big positive that one can look for from TCS. But the big question will be whether these deal wins can also impact margins going forward. Now, for Q2, the margins for most of these companies is likely to be with an uptick of 20 to 40 basis points. On the guidance front, Infosys is likely to maintain a fiscal year 2024 revenue growth guidance of 1% to 3.5%. The EBIT margin guidance is also likely to be maintained between 20% to 22%. HCL Technologies' revenue growth guidance is likely to be maintained with 6 to 8% guidance that they had given. Now, also when we talk about the margins, they could actually be, the EBIT margins could be lower on the lower side of the guidance that they had given, 18% to 19%. So, it could be on the lower side. For Tech Mahindra, the focus will also be on how the strategy under the new CEO and the margin recovery process will now begin. On the valuation front, remember most of the companies in on a fiscal year 2025 basis, they're trading below their 3-year average. But when you compare with the pre-COVID year or pre-COVID time, the 3-year average, they are trading well above that as well. So overall, the IT sector is expected to deliver a soft quarter in a seasonally strong quarter, and that will be something that one will continue to watch out for. Remember, commentary more than the numbers is something that you need to watch out for.
If you like the video, do like, comment, share and subscribe.